Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here with a Forex market trading analysis and crypto trading analysis for the week ahead of August 16th through the 20th. And before we get into everything, we want to show you our disclaimer to remind you once again that this is for illustrative and educational purposes only. And if you have not done so, please subscribe to our YouTube and Twitch channels, Forex Trading Unlocked, and also check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in both paperback and Kindle versions, written by myself, Teddy Keckstedt. All right, let's get to our live active screen here. We have the Forex-Trading-Unlocked.com website pulled up. We already hit the Workstation tab on the navigation bar. All right, let's take a look at what we have here. So as far as economic numbers coming out on the 16th, let's see, we don't have anything really on the 16th. The 17th, we do have for the UK, we have some employment numbers. We have some construction and employment numbers for the EU. So the pound and the euro on Tuesday, there's some things now. What you really want to pay attention to is in the US at 7:30 Chicago time, Central Standard Time, is the retail sales number and also industrial production. Retail inventories will maybe somewhat of a number, but I think the ones you really need to pay attention to are the retail sales, as well as the retail sales for the most part, and also industrial production as well. Then we also have the import-export numbers that affect the yen also. Then come Wednesday, we have CPI for the pound. That's a big number. We have PPI for the pound as well. So definitely Wednesday and Thursday, you're probably going to, Tuesday and Wednesday, you're going to see some action with the pound. We have for the Canadian CPI also coming out this week. Housing starts, building permits for the U.S. That will be a big deal also on Wednesday. We do have bond auctions going on that may have a little bit of an impact on the interest rate markets, but I don't think it's going to be that big of a deal. Unemployment for Australia, that's also another big number. Australian dollar has been a bear, to no pun intended, in all the cross rates with Australian dollars. So they'll be very active, I'm sure, come that number as well on Wednesday. For the Swiss, industrial production on Thursday, we have the Philly Fed employment numbers, and on Thursday, those numbers are going to be big in the U.S. We'll see how those tick up or down. Then we also have CPI for the Japanese yen. And then Friday, we have retail sales for the British pound, and that will wrap up the week for the numbers, economic numbers that we need to pay attention to. Remember, you don't want to get caught off guard when it comes to things like that. So basically, watch out for Tuesday, and Tuesday, Wednesday, Thursday is for the bulk of the economic numbers, and they do impact big currencies because they impact the dollar, the pound, and the euro. All right, so let's see what we have going on here. We have the euro up here. All right, so let's see what we have going on with this here. So you can see we have two little lines marked off here for the euro. We have the last swing high and the most recent swing low that we're coming off of from a couple sessions ago. Now, I would be mindful of what is going on here with the euro. The euro, no matter what, is in a bearish trend. Excuse me, has been since the springtime. All summer long, this market is a bear. Does that mean it's going to stay a bear? Well, I don't know. We do have some big economic numbers on Tuesday and Thursday, remember, coming out. I would be very mindful of what happens with those. So, right now we are watching this $19.08 level. This would be any type of bullish breakout area that needs to be crossed before we can really start to say that this market is in neutral, not even bullish, but neutral. The trend, as you can see, overall is lower. The slope of this trend, is it that minor? Well, okay, we can take it down to even, let's go down to here. All right. So by attrition, we could come through this downward sloping resistance line. But right now, the key thing is we would have to cross this high. What would that do? We're coming off of a lower move high into a lower move low. This is consistent with what? A lower trending market. So we have a bear trend in place. There's no other reason to look at this in any other capacity. We don't have a valid buy signal really as far as giving this market any true strength. So I would not get caught up too much on the bullish side of things just because we had a nice little pop on Friday. Remember, this market has been oversold, but as far as most indicators would account for it, that doesn't mean that it is. There's a lot of reasons for this thing to continue to traverse the lower boundaries of the euro US dollar range. I think that it will continue to do so as well. This is just the way it looks like. You know, there's no reason to, like I said, because of Friday's trade, get too over zealous on this. So the dollar index obviously has turned as of Friday's trade just because of the fact that we had this big move in the euro. Remember, the euro and the pound are the two biggest components of the dollar index. So if you're looking at the dollar index, then right now you're looking at the dollar as reversing gears. I would use caution right now. I do believe that this is a profit-taking bounce. We'll see how the market opens up Sunday night this evening. I would say that you're most likely going to see a little bit of follow-through to the upside for the euro US dollar yet. Now, I do believe that the pound has a better chance, and we're going to get into that in just a moment, of maintaining strength in the euro. So right now, I would say unless you get above $1.1908, be very cautious being a buyer right now. I think that you could get caught in a bull trap, and then all of a sudden this market falls back on support. So there's a lot of political and economic reasons why the EU in general, as well as the euro, are going to probably stay neutral to negative versus the dollar in the longer run, but we'll see. Anything can happen. So right now, if you are an aggressive seller, then I would say make sure that you are mindful of this $1.1908. And also as a bull, I'd be very, very careful of trying to catch a falling knife. So if you're thinking that this is a turn in the market, be mindful of this $17.05 level. Any failure from there would have this market unhinged again. British pound US dollar is not quite in the same shape as the euro. As you can see that it is coming off a lower move low here, set back in July, and we had a higher swing high here, putting this market into neutral. The overall trend for the summer has been lower. You could look at it, view it as having made an extended lower move low, and this is a lower move high. So if you're bearish, this is your line in the sand. Above $1.3990, it will be very hard to be bearish because, one, you take out the downward sloping trend line, keeping this market in its pattern lower and its trend lower. Also, if we get above $1.3990 again, you're making a higher move high after a higher move low, signifying what? The beginning of a potentially bullish trend. So we'll see how that goes, and it will be interesting, that's for sure. Now the pound, if you are someone who focuses on the pound and other currency crosses, I'm sure you are aware of the fact that the pound is pretty much a bull versus most currencies, except for the Asian currencies, the yen, the New Zealand, and the Australian dollar. It's probably a little bit more neutral to not, I wouldn't say bullish, but it's definitely probably more neutral, and it's definitely not really bearish either. Short term, perhaps a little bit, and I think that you're seeing that just because the Australian dollar has been beaten up so much that it's just a little bounce and relief, if you will. I'd be cautious of the pound Australian dollar. Right now it's floating not too far from its highs. Odds are it will make a run for higher move highs, just because the pound as a currency is stronger than the Australian dollar versus most other currencies, and as it gets a lift, especially against the dollar, it will be hard for the Australian dollar to rally against the pound. If the pound is rallying against the U.S. We do have a short-term buy signal here that occurred on Friday. So we didn't have a buy signal in the euro. We just had a bounce. This one here, as you can see, I mean, if you really look at the pound, it's just been in a wide range trade for the past 5 months. Last 2.5 months, it's definitely been trending lower, with the last basically 3 weeks looking like it's trying to go neutral to higher. So we'll see. Short term here, aggressive bulls, $1.3792. This is your baseline in the sand. If we fall below this area here, this market is bearish. Be cautious. So it's a very low risk buy here. knowing that we have this swing low as your obvious risk level. And should we get follow through to the upside on Sunday night into Monday and especially Tuesday, remember we have these economic numbers for the pound. If those, I would assume that there's probably a lot of weak shorts in this area here between $1.39 and $1.39.90 in this dollar area here. If that is the case, then as we tick up into that, we will probably set off enough buying momentum from that to challenge this $1.39.90 level. And if we do, and we take this out, well, then you have new move highs. All your weak shorts are going to get skittish here for sure. And you're probably going to see a lot of aggressive bulls jumping on the bandwagon as you get closer to these multi-month highs, multi-week high rather, and multi-month highs as well. So right now we are short-term bullish, the pound US dollar. If you are a bear, I would say do not risk anything more than $39.90 here. Anything above here has you making new move highs, which is following the trend, which is up right now currently. Only on the short-term daily and hourly are we really negative. Overall, over the past few weeks, and even in the past month and a half, you're neutral to higher. So be mindful of that. Very key levels here. It's pretty obvious where we're at. So if you want to jump in on a longer run bull trade, if you think that the pound is going to be sustainable as far as upside momentum, then you know what? Now you have a very low risk area because, like I said, $1.3792 here. This is the line in the sand. We have a buy signal here. This is a bullish engulfing line buy signal that occurred on Friday. Very strong short-term buy signal for at least the next 3 to 8 trading sessions. And once again, with the numbers that are coming out Tuesday, Wednesday, and Thursday for the pound, if those spark some buying momentum, I would be very cautious because that is taking out this downward sloping resistance line, keeping the trend intact, as well as the short-term trend intact, which is also looking like it could be violated very, very quickly. See what I'm saying right here? So as we pierce one, we'll be butting up against the next one, and above that, then we start to take out these highs, making higher move highs after higher move lows, which is indicative of what? A bullish trend. And that's the main thing you got to be mindful of, excuse me, and be aware of. All right, so we have a buy signal in the pound. Let's get to the US dollar CHF. So we're cruising through Europe before we hit Asia, and then Canada, and then the cryptocurrencies. US dollar Swiss, we had a big sell-off on Friday. So the dollar got hit by all the European currencies. The dollar got hit by most currencies, period, on Friday. So I would view this more as a profit-taking slide. Do I believe that there's follow-through to the downside with the Swissy? Yes, I do, but I think between this 91.30 down to 91.02 area, this will be a good buying zone. This is your 50%, the 0.618 Fibonacci area. It falls just below where we had this key support, and we may even just bounce, may not be able to get too much below this 91.30 area. So be cautious and mindful of a potential spike. Now, overall, the trend has been lower for the last 5 months. We have coming off this low here in June that we corrected back up to here. We had this head and shoulder pattern that evolved over the middle of June into the middle of July. Set off this break into the beginning of August, which we bounced. We had this buy signal here, which was a bullish engulfing line buy signal, and we have made it through our price targets. But notice that as it did, got a little bit higher, butted up against this resistance here. You can see high, high, high. We're right in this area here. We've gotten rejected once again, but we did make a higher move high. So off of this high here, which was a lower move high in the longer term trend, we came down and we made a higher move low. So is the long-term trend finally reversing? Is it going neutral, or are we getting ready for a bullish move? We'll see. I don't know. With the way it looks on Friday, you would think that we're getting ready to be bearish. But remember, markets typically go out like they come in, and if you follow that theory, you can see how just as it broke down severely here, it rallied back up really quickly, and just like it rallied really quickly here, it's selling off really quickly here. So this would be a good area for support to end this kind of volatile up and down swing action here and establish more of a grinding trend, which I think that's more what you're going to see. The Swiss typically, like even though on this chart you can see it's had some radical moves, that seems to be the way it trades lately. Like, it's ironic how the Swiss will have a bigger range than the euro actually versus the dollar on many days now, which is very, very, or used to be very, very rare. It is not as rare of an occurrence now, but it's a good way to see the spike in the Swiss. You can see that there's more of a disconnect, excuse me, from the currencies, where the Swiss, even though it's part of the EU, its currency free floats on its own and is not as susceptible to the euro as it had been in the past, or what had been the D-mark actually. So there's a lot of indifferences going on politically in the EU that are causing that disconnect. So even though Switzerland and the EU may be on the same page, the Swiss franc doesn't have the liability issues that the euro does. So with this being said, once again, if you're an aggressive bear, I would be cautious and mindful of the recent high from a few sessions back. Trading above a 92.43 has this on a big bullish campaign, and that would confirm the desire to make higher move highs after this higher move low, which would then confirm an uptrend. Right now we don't have that confirmation. We have a big sideways swing trade going, and then, but yeah, even still, if you are a seller here, I would be mindful of this area from 91.30 down to 91.02. I don't think you're going to see very much below that, if we even get that low to begin with. We do have some room. We have this upward sloping support line holding the short-term trend intact. We'll see if it holds. Only if we fall below 90.18 here will we become an aggressive bear, confirming that this trend is eroding and there's a lot of strength in the Swiss versus the dollar. But I don't believe that we're going to come down by this swing low anytime soon. US dollar JPY. Let's head over to Asia. All right, as you can see, the Japanese yen and the Swiss behaved a lot alike on Friday, and actually the last few sessions. Remember that there are three flight to quality currencies on the planet. There's the number one is the US dollar. When the US dollar is not flight to quality, it tends to be the Swiss and the Japanese yen for those trade zones. Does that mean that there's a flight to quality going on and a bearish dollar? No, absolutely not. But remember that this trend overall has been up. It's a grinding rally. We still have a longer term upside target of 112.5 to 113.5 easily, 114 by the end of the year. The trend is your friend. Right now we are viewing the US dollar yen trade as in a corrective slide. We had this buy signal that occurred a few weeks ago and came up to our target range. Now we're looking at more of a digestive phase, and what we could also have is just this buildup of buying pressure that's basically screwing with all the weak shorts, getting them trapped in here, and then ready for the buying momentum to kick in again. Overall, it's kind of neutral for the past month and a half, but as you can see over the past couple weeks, it really exploded to the upside. Now, if we get above 110.84 again, that would confirm new move highs after a higher move low. So, and that was indicative of what? A higher trending market. So it'll be interesting to see what kind of follow through. Only if we can take out this upward sloping support line, keeping the longer term trend intact, would 108.71 be in jeopardy. And we really have to take out this swing low to confirm that this market is no longer on the longer term bull campaign. And there's a lot of economic and fundamental reasons why I think we have a rising floor in the US dollar yen, especially with we have potential lockdowns coming back, and who knows how the world economies are going to come out of this stuff. And it'll be interesting to see, but unless we really start thriving and getting back to where we were in 2019, I don't see this trend changing, and I really do believe that we'll see the US dollar yen up at 113.5, 114 even before this year is out. Still a lot of time left in the year, but the way this market trades, it could snap above 110 very quickly. Like, I wouldn't doubt that sometime over the course of the next few trading sessions, you find this market bottoming somewhere right in here, and then coming off of that. So trending lower, bobbling around in here, and then I think it's going to start to work its way that way. So you can see that right there. All right, So that's kind of how I see this one fishing around here. Is that going to happen? Well, it will. Time remains to see what will happen, but I believe right now that that is where we're headed. With the way these numbers are looking, it's kind of a wide range trade. I would use caution. I would look for a buy signal somewhere in this area here. And then you know your risk is rather low. You want to use 108.71 as your risk level. If you're short, then this is your risk level up here. So if you're not already in this trade, I use caution because you have a lot of risk without a lot of reward. I mean, even if we were to take out support here, I still think you're going to see a lot. Oops, I don't need that one. Let me get this. Okay, oops. There we go. All right, so even if we do take out this 108 area, we would have to get below this 107.5 area to really show and prove that this market has turned. And I would definitely find a lot of support, as you can see here. Support, 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 support right here. This area is very solid, but it's also rising. That's why I think this is a really good area right here versus underneath here. And I would use caution selling down and if the market gets into this area, because it's very likely it's going to snap back like it did here. Like we're going to have a big aggressive move back up and then start inching your trend higher. And if you've noticed that in this rally, you've had bigger sell-offs and then you've had the creeping rallies, you know. So just be mindful of that. I would use caution unless you're already in a short trade. Keep your stops tight and work it. If you're not, I just think that your likelihood of selling in the hole becomes much more enhanced as we move forward into the new trading week. So more of a looking for a reason to buy. Remember, the trend is your friend. We are viewing this as a downside correction, and only a failure from 108.71 would change that. All right, Australian dollar, US dollar. Now, interestingly enough, New Zealand dollar is starting to get some signs of strength, even though it has a lot of the same issues as Australian dollar and the Asian trade zone, what other currencies have. But their Fed policy is looking towards a new outlook that hasn't been seen by most countries or anywhere around the globe in a while, and that is raising interest rates. That's right. The trend for New Zealand dollar right now, as it stands and looking forward for the next 3 to 6 months, is a policy of raising interest rates. Now, for all of you out there, remember that interest rates are a function of currency pricing. So as interest rates go up, there's a value in said currency, whichever that happens to be, whether it's the dollar with the US Fed or the Bank of England and the pound, the ECB and the euro, obviously the Bank of Australia, and then assuming that would be for Australia, and then there's the New Zealand Central Bank as well, which that's the one setting the rate for that currency. So when it comes to that area, you're going to have strength there, which that also makes Australian dollar weaker for that trade zone because of the desire for those dollars. So it'll be interesting to see how it happens. You can see that we're grinding these lows here. We've been going sideways. It's been a range trader's delight. You can see it. We've been basically consolidating between 73.15 and 74.27, locked in this $1 range. Overall, the trend is lower. I think that this is just a pause for the cause. Unless you were to get really above 76, 76 even here, this here is just a consolidation zone. Remember, the overall trend on this one is a bear. There's a lot of geopolitical reasons, there's a lot of economic reasons, and right now, the way Australia is moving, except for having their good stint in the Olympics, that's about the only positive thing going on in Australia right now. Lockdowns, lack of movement of commodities and raw goods out of the country is definitely not helping things either. The locking down of businesses and just the fact of lack of demand out of China also for their materials is putting a stranglehold on this currency. So odds are we will see this test support some more. After all these other currencies that we looked at so far, how they were trending either against the dollar one way or another, going up or down depending on the cross, this one has been going sideways. So even though we have a dollar sell-off that emerged on Friday and we'll probably see follow-through into Tuesday, I don't think you're going to see much to the upside with the Australian dollar, US dollar. And I would be mindful, unless you find a real solid buy signal, that this low here of 73.15 is going to be tested. And then once we fall below that, it's not like we're going to have, I don't think we're going to have a big sell-off like this. We're going to see a multi-dollar move. But I can see us getting down to the 72.30, 72.20 area. And then maybe even if we, well, should we get down to that area this week, we could probably spike lower with an economic number somewhere into Thursday, where this market gets down to 71.5 on a price basis. That's probably the extreme. I don't see it getting much more severe than that. It would really take I mean, right now we're in this range. You need to break out to the upside above 74.27. So for aggressive shorts right now, selling up against the 74.27 level is probably a low risk sell. If you haven't been in the longer term trend, if you're sitting on it right now, 74.27 area is a good place to put some stops in case we do get a correction into this area. But once again, I don't think you're going to see much of a rally that will be sustainable. If anything, I see it spiking up and then falling back hard on support should we get a rally. So I would be looking for a rally to sell. As far as buying this market, you have a low risk buy right now with 73.15, but you can see it's chopping around and playing with this. I think you're throwing your money away, but if you do, look at this area. Just make sure that you keep this mindful, and especially the low back here. Anything below 72.88 and you are trying to catch a falling rock, my friend, and you do not want to do that. All right, New Zealand dollar, since we started out talking about that with the Aussie, see how this one's looking? This one's trending higher. It's been neutral for the last 2 months basically, but for the past month it's been trending higher, making higher move highs and higher move lows. It's been a little choppy, but not like the Aussie, which is just going completely sideways. This is slowly creeping higher. Be mindful of 70.89 here. I think we're going to challenge this downward sloping resistance Sunday night into Monday. Should we do that and pierce this, I believe that 70.89 will be taken out sometime over the next couple sessions. We're not overly bullish this currency. We're only bullish because of the interest rate factor and the fact that they're looking for a series of higher rate hikes in the New Zealand dollar. So that isn't going to probably propel it really high up to the 73.5 area anytime soon. But you could see over the next couple of months, if we maintain this trade, that, oh wait, we don't even need this one. Let's get rid of that. If we maintain this trade, that by October, November, we could be trading up at 71.5, 72 even here, where it's just slowly grinding higher, drifting, making higher move highs and higher move lows, maybe spiking down for a day or two, but then bouncing right back. And I believe that that's really the trend that you're going to see with New Zealand dollar, US dollar, unless the US Fed was going to start to raise rates, which we know that's not happening anytime soon. Or if the New Zealand central bank would change its outlook as far as whether it wants to continue to raise rates or not to raise rates. So that is the question, I guess. All right, we don't have any questions on the chat so far on YouTube or Twitch. Of course, it is a Sunday. A lot of people are probably enjoying the summer weather and are going to watch this video later. That's all good. So US dollar Canada. Let's get out of that real quick. One last talk about New Zealand dollar. So we did give you this upside. Only a failure from 69.01 here really has us on a bearish campaign. So that's the one thing. If you're looking to sell this market, you have a low risk area here of 70.89. You get above this, you're on the wrong side. Remember, we have fundamental factors that are most likely going to drive a bullish trend for the next, could be 1 to 4 weeks, it could be 1 to 4 months. Like I said, it depends on the outlook and the speak that comes out of the New Zealand central bank. But right now it looks like they're trying to shore up their currencies, which in this inflationary world is probably not a bad idea. All right, so now we can go to US dollar Canada. And one last currency cross before we get to the cryptos. All right, so we have US dollar Canada, which is snaking along It's trying to maintain a bullish posture, but as you can see on Friday, it had a really tight range. With the ranges like we had in the euro, the pound, and these other, especially look at what happened in the Swiss and the yen. US dollar, Canada, flatline. So there's a lot of geopolitical tensions that are, I keep on reiterating this, I do not understand what's going on between the White House and the Trudeau administration, but whatever. The economics of things, the oil trade is pretty much off the table right now, but overall, US dollar Canada is at best neutral, but I'm very bearish. I think this 128.11 high is probably going to be sustained for a while. It does look like the market's wedging, but this is more by attrition than actual weakness or strength. I mean, as you can see, we came right into this wedge on Friday. So what are we going to do as we cross this threshold right here? So as we get into later this week. So as we get into Sunday and Monday, as we come through this threshold here, are we going to maintain an upside posture? Are we going to go down? I think the odds are pretty likely that we're going to go sideways more than anything over the next couple sessions. Remember, we have some numbers coming out Tuesday, Wednesday, Thursday. Those I think will be the pop. If you're looking for a move, I would say play the recent high and definitely the recent swing low. So here we have off of this higher move low, a lower move high, a higher move low, a higher move high, a higher move low. So now the question is, will we make a higher move high or will we fail from here? So 2478 is your sell-off area, and I would definitely be very mindful of this. Selling pressure is expected to build. So if you are not mindful of these breakout levels, I think you could get caught on the wrong side in a very, very fast-moving trend. So here's the first one. We fail from 2478. That has us leaning on 2421 in a heartbeat. Anything below here has the longer-term bear trend back into action, and I would watch out for this slope. This here is kind of mild, but if all of a sudden we start taking out these levels, we could be trading down in this area, and this trend line all of a sudden starts to move away from us. As we start to come down here, you can see, oh, the trend starts to come back, and I would not doubt that that's the way we're going to go. So if you're an aggressive seller right now, you can sell against $1.2592. Obviously, anything above here, higher move highs, you're on the wrong side. The short-term trend remains intact, but same thing is for a buyer. If you're buying, your risk should be no more than $1.2421. Anything below here, you're really on the wrong side, because then you're confirming a higher move high, higher move low, lower move high, and lower move low, which goes with the longer term trend, which is bearish. We also could have a potential head and shoulders pattern sticking out here. For those of you that are not aware of what that is, you can look at this here as your head. Okay, and then we could have a potential shoulder forming here. We're not sure if this is or not. And then we could have this as our shoulder area right here. Okay, so this would be our neckline right here. This is a big area right here. As you can see, this low and this low, boom, they merge. They're basically the same. Shoulder, head, shoulder. If this doesn't go up above $1.2592 and we do fall through support here, especially once we penetrate $1.2421, that sets off the head and shoulders. How big of a break would we expect that to go? Well, at the minimal, and this is where it gets interesting. Here is the, oops, what do we do here? I already did that one. Okay, so we have these lines here. Here's your 50% and here's your 0.618. So 0.618 here would be the minimal of a slide, where if this market is not in a bear market, it's going to find support here and then turn. If it fails from here, so it's 0.618 level, all bets are off. We have this head and shoulders pattern coming back down to the $1.21 area, and once you're back here, you're right off of these lows, multi-month lows. So like I'm telling you, be very careful. If you're looking for a low risk short right now for a long-term play, now you're in a great selling area, somewhere between tonight and this week. Probably if we do spike higher, be very cautious. It could be a bull trap, and then all of a sudden we tank, you know. So we'll see how it goes. Very interesting setup going on right here, and once we can, especially if we take out $1.2421, look out below, and that's where we have divergence also with the US dollar. We could start to see, like this week, it could have a nice rally in the pound, the euro, and the Swiss and the yen against the dollar like it's doing. So I'm expecting follow through with that is very likely. Friday, all those markets are rallying versus the dollar. The US dollar, Canada went down, but only a little fraction. So if those do continue to follow through and the dollar's under pressure, that would set up a good chance of hitting support, falling through these levels, and then touching this off. But I think you'll see more follow through with the US dollar Canada to the downside than you will with, say, the pound and some other currencies. Not perhaps the euro. That one might be a different story. So we'll see how that goes. Now let's get into the cryptos. All right, so we still have a couple people here viewing us, and no one's saying anything on the chat. So let's get to, we're going to start out with the DOGE. All right, Dogecoin. Got a nice little rally going on for all your Doge fans out there. We're piercing this 30 cents. I remember 30 cents was the level that everyone a couple months ago, they're like, oh, when Doge gets down to 30, I'm going to buy it at 30. Well, now we're back at 30 cents. The question is, will fresh buying come in? When we first fell down off the highs of 75, just below 75 cents here, we came down to 21 cents, but right around 30, it seems like there was a lot of support, and that's where it was trying to hang on. Then the news and the reality of the fact that the technology most likely is not that sustainable in the future. It would be like trying to, we still have buggy whips out there, but how many buggy whips are sold? You know, I mean, there's only so many buggies out there at a few amusement parks and historical themed areas, and you know, some big cities where they're riding some coaches through the streets for, you know, tourists and whatever. But outside of that, that technology just is, you know, it's used, but it's not embraced very much anymore. So that's probably what is going to happen with the Doge. Even if it evolves the technology, it doesn't seem to really fit in place like a lot of the other cryptocurrencies do, as far as having an actual use, a functional use, and a usable use that will be embraced and want to be continued to use in the future. But as far as the pet rock meme thing, we got things going again, and we're looking for a continued trend here to get up to 35, 40 cents. Our big area is 44. If we get above 44, folks, I think you're going to have a lot of profit taking, because I think there's a lot of people that caught long between 30 cents and 75 cents that are just trying to get out. That selling into the new buying, I think, is going to be absorbed. And then the question is, when these whales get out, what's going to happen with the little guys? Is it going to are they going to be on the right side of it, or is it going to fall apart again? Well, like I said, if you look at Ethereum and Bitcoin, which we will look at later, and by the way, we're long all these cryptocurrencies that we're talking about. Ethereum has a future and growth and is evolving. Because of the Bitcoin and the blockchain and the way they can use things and integrate things and with other currency, crypto assets, if you will. The Doge just doesn't have that functionality. But so right now we're looking at it only as a perceived store of value, which that's a whole other issue on its own. And if that's the case, we're just looking at the hype, watching the marketing on it, and that's where I really get caught up on, is that when you have something such as Dogecoin and a few others, like when there's having marketing through billboards and other types of advertising mediums, getting people, encouraging people to purchase these things, that's not how, well, regulated markets don't do that for a reason, because usually only suspectable or suspect markets do such things, and usually that's because they are scams. So just be mindful of this. We're looking for this 44 area. We are long just below that from some payments we took in because we're like, okay, well, yeah, we'll take it. Why not? And now we're just waiting to liquidate. So that is our plan once we get to that area. Now let's go to XMR US dollar. Now you notice that Bitcoin has led the charge, and so has Ethereum. Monero continues to grind higher. Today it's a little bit lower, as you can see. I would tell you that this one I still see as a fair value, somewhere around 350, 400 tops. We have to get above 314 to confirm any real strength. I think we're going to fish along right around where we're at and just grind higher over the next couple months. I don't see the run up like you have in Ethereum and Bitcoin. This is a more sustainable trend, but once we get up to that area also, I find that that's probably going to be the capper. Just for the cost, remember that technology is meant to make things cheaper and what have you, and that's the other problem with the valuations of these crypto assets. As the technology gets embraced and it's more utilized, that's great as long as it's still affordable. As these assets go up in value, they become more, well, they defeat the purpose of what they set out to do, which is make transactions more secure, more quickly, and more affordable. So once that more affordable part starts to get screwed with, and that's one of the problems with the whole formula when it comes to these cryptocurrencies or crypto assets, that becomes an issue. So sustainability for XMR, like I said, I think we'll run out of gas around that area, but I do like the trend. I think it is going to continue to inch higher. I would look, it's making higher move highs and higher move lows. I would only really get worried about this as far as valuation if we get back below 224. And the real big one is actually this low we're coming off of around here. Would be 172. This area here I could see us still churning around and then keep on trying to make higher move highs. Should we fall from $1.172, that means either the whole crypto space is falling apart because of a big sell-off in Bitcoin, which I look at Bitcoin as the dollar index now, even though it is not an index. It seems to behave like an index for the cryptocurrency space. All right. ETHUSD. All right, this one here, what do we have? We have a very nice trend. It's a pretty sustainable trend. It's not too steep, but we have a sell signal here. Interestingly enough, we have this 2,886 level. This is our key level of support. If this sell signal is valid, then we are likely to see a slide back to this 2,525 area, with 2336 being the extreme. That would see, you could see where this was currently tops, this was currently bottom. So right here, this 2,336 would make a very likely turning point as far as if we were to get a sell-off. Now the trend has been decent. It's been a grind, not too much of an explosive rally. So it would be not out of the realm of possibility, let alone likelihood, for us to have a correction back to this area. We are overall bullish this crypto asset. We do own it, and right now we are looking to take profit at a much higher level, and I think that as it comes back down into this area, especially if it does bottom and makes a run for higher move highs, that will help keep us on the longer term bull trend, because we do have this one going up to, well, all right, we're not predicting the $40,000 by Christmas like some people are. I think some of these numbers are just thrown out there because why not? It's just not that, well, these cryptocurrencies do move unlike any other markets out there. It would be thin volume, and I can't see the amount of buying pressure that could bring it up to that level in that short amount of time. If you see Ethereum up at 40,000, that means that Bitcoin would probably be crossing the $150,000 to $200,000 mark. Not that that couldn't happen, who knows? We could just start to see an explosion as far as pricing in the crypto assets this fall, especially as they get integrated with all kinds of investment funds and what have you. But then that also becomes very bubbly, and I don't mean that in a nice sense. I mean that in a crash scenario sense. So be mindful of that. If anything, if you're long, I know we're looking to just nibble away out of some of our profits and stay net long, but definitely take profits along the way. With this sell signal here, we did get out of a couple things on Saturday. So, and now we have today's trade, and we'll see how things are going. If this continues to follow through, then we're looking for this correction to be maintained. This is a high probable Japanese sell signal that is formed as of yesterday, which is one of our lesser of the higher probable ones. Like, we like it, but it's better when it's confirmed with this another following negative day like it is today. So if it closes, and we're going to be watching this for later on, we may even have a special episode just on the sell signal in Ethereum that is being generated. But then we are not overly bearish. We're looking for a bearish correction. So not looking for a big change in trend, but right now we're looking for some profit taking, especially if we can get, if the market closes where it's at right now, pretty much today, and then Monday's trading into the rest of the week, it would be nice to see a slide below $2,800, $2,886 here. And if we did, that would be a higher move high and then making a lower move low, which puts this market at least into neutral and also stages a corrective slide ahead as well. So we'll see how that manifests. BTC USD. We're going to look at Bitcoin. This one has a similar sell signal. It has the same thing. It topped out yesterday. It gave us a nice little short-term pause sell signal. This is not necessarily a big sell signal. It's just a short-term pause, which is being followed through with today. This one is significant. If we have the lower move trade, trending trade here, this will have us leaning on this upward sloping support line that is holding the trend intact, and then setting us up for a correction down to this 38,800 area down to 36,400. So we'll see what happens. Very interesting. This has to be confirmed over the trading session today to really put this in perspective, and also make us want to get out of some of our BTC that we own. If we do take out this high from yesterday at 48,252, all bets are off. Same as with the Ethereum trade. If the trade from high from yesterday gets taken out, obviously the sell signal is negated. So we'll see how this goes. Right now, like I said, we're waiting for today's close. Should we settle lower, the likelihood of falling down and testing this 43,929 area over the next couple sessions is very likely. And if we fail from here, that's a higher move high and a lower move low, which confirms that we are looking to go sideways to lower in the BTC USD. And that pretty much wraps things up. We don't have any questions on the chat. It is a Sunday, so that's probably why that is the case. So and since we don't have any questions, we're just going to go back and do one last thing, and that is to remind you to subscribe to our YouTube channel or our Twitch channel, Forex Trading Unlocked. Also go to our website, forex-trading-unlocked.com, for all of your Forex information. That's forex-trading-unlocked.com. And also check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions, written by yours truly, Teddy Keckstedt. And we look forward to seeing you guys later on this week, and we will have some live streaming stuff also coming up for you guys in just a little bit, especially since we have these crypto signals to go over. So thanks again. My name is Teddy Keckstedt from Forex Trading Unlocked, and we will see you guys soon. Have a great rest of your weekend. And